All right, thanks everyone. I'll maybe just start off with a bit of macro. I think those of us who follow the uranium space are fully adept to the macro, but the point here is that it's never been stronger. The macro uranium space. There's a tipping point a number of years ago, handful of years ago, where public sentiment has changed. Policy has followed that. You have nations globally that have committed to and recommitted to nuclear energy as a function of the baseload energy source globally, as a function of reducing carbon emissions. But it's beyond that. It goes into energy security and national security as well. And then in turn, one of the biggest differences between previous cycles and the cycle we're in right now is the fact that you not only have governments driving this, you have major financial institutions, and you've got the tech sector that has become a fundamental player and a driver in the nuclear renaissance as well. From there, if you look at the history of the nuclear industry and of the uranium sector, you go back to the 60s, 70s, 80s. Not sure what's going on up there. The 60s, 70s, 80s, where in the 70s, you had the build out of the demand. That was the initial push with civil nuclear energy across the Western world. Now we're into a period of time where you're seeing that being driven out of Asia and other continents that are driving the demand side of this picture. But the important part here is that we perpetually had an oversupplied uranium market. There was an oversupply that persisted from the mid 60s into the 90s. That oversupply in the market now has essentially disappeared. Secondary supply in the uranium business typically is about 20 to 25%. Moving forward, it's under 9%. And so what that means is that you've got now a purely supply-demand driven fundamental uranium market, one which we've never seen before. And that gets us, so from the macro side, those macro fundamentals have been building. They've been building for a long period of time. The time value of money, though, is a function of this right here. It's a contracting cycle. The contracting cycle is what drove the price appreciation in that 2006, 7, 8 time frame. We're at the exact same period of time right now as we were in 2006. I think this is a very important thing to understand because the last cycle was not driven on supply-demand fundamentals. The last cycle that we saw was purely a contracting cycle. And the upward price movement, the upward price appreciation was because you had a bunch of contracts that were uncovered and needed to be signed, and that drove the price up. Where we're sitting right now is, in my view, is very similar to 2006. But the main fundamental differences are, at that period of time, you had an oversupplied market. Now we have supply scarcity and supply uncertainty. You had mobile inventories at that period of time. We have immobile inventories at that period of time. And you had a vast amount of secondary supply in the market at that period of time. We don't have it now. And so when I say the fundamentals have never been as strong as they are right now, that's the main reason. Well, here, let me get into trying to move this thing forward quickly. Which way should I be pointing this? Yeah. Just move forward, please, guys, if you could. So with that macro backdrop, that's why NextGen Energy, or that's why NextGen existed in the market when they did with the discovery of Arrow, but that's why Atha Energy exists where we exist right now. We're a new entrant in the uranium space. We're built in 2023 to take advantage of the macro market that we see ourselves in. There we go. Okay, we're back online. Okay, over the first year, we came to market with 3.5 million acres of exploration property across the Athabasca Basin. Over the first year, we did an unprecedented amount of exploration across that ground, about 3 million acres in exploration work, geophysics, etc. From there, we also acquired 2 other companies. We acquired 92 Energy and Latitude Uranium, maturing our portfolio substantially. In parallel to that, we did a $23.5 million capital raise, uplisted from the CSE to the TSX venture, and then over the last number of months have deployed an industry-leading amount of capital into the ground to advance our exploration assets. We've deployed $30 million in exploration expenditure this year, about 2/3 of our way through that. We did that across a range of assets. We did that primarily across Angulac, a 43 million pound deposit that we just put 10,000 drill holes in, or 10,000 meters into, 25 drill holes, every one of them mineralized, waiting assay results within the next few weeks here. From there, we invested into our Gemini project. That's a new discovery on the eastern edge of the Athabasca Basin. Then continued to invest in our portfolio of projects, which now amounts to 8.5 million acres across Canada's best uranium jurisdictions: the Athabasca Basin, the Thelon Basin, and the Central Mineral Belt in Labrador. So what are we trying to do? What are we trying to achieve? It's a big portfolio approach. So based off of the work that we've done at Angulac this year, we look at the opportunity to re-rate. Every one of those drill holes was a widely spaced step out, then redefining the envelope of mineralized rock there. We now believe that based off the results we have in hand, we have the size and scale to move Angulac into a development stage project. Well, there's very few Canadian uranium projects that are at a development stage. They trade at an EV per pound ratio of, say, from $5 to $12 on an EV per pound metric. Now, what we look to do is build the resources, re-rate into that phase, while at the same time providing a significant amount of exploration torque based off of Angulac first, Gemini, where we have drills turning right now. Everything in green that you see out there on the map is Atha. We've got the largest amount of exploration property across the Athabasca Basin, across every past producing, current producing, and emerging producing district. What we've done there is mature exploration to the point where we can prioritize our high probability exploration targets from the largest best uranium jurisdiction globally. We also have the largest land position in the Thelon Basin, which is an emerging uranium district that'll be very important in this cycle. Getting short on time here, but overall, we've got the capital markets team, we've got the technical team, and the platform and the strategy to move forward in becoming more and more relevant in this uranium cycle and capitalizing on the strongest macro environment that we've ever seen.